Hello traders, this is DAX recap video for April the 11th, for Thursday, and now let's start just with the bigger picture this time. So where are we and where are all the US markets? So DAX clearly made a break above this larger time frame resistance and tested it and made a move to the upside. So S&P is here near the all-time high, making some kind of range, struggling here to go higher. Nasdaq very close to the all-time highs, and Russell at his own larger time frame resistance. During that times, when markets are sitting here high at resistance, VIX is just here at 13, so really no fear on this market whatsoever. And I gave you these charts with the morning notes. This is the zones chart. As you can see, 808 market was near previous cash close, and the entire pre-market range was between the bottom of yesterday high zone and here at the pre-market support. So this was the pre-market range. Also, this cash index chart is good not only to mark yourself gaps and keep track of gaps, but also to get help determining bias. Now we are in the range, so now this chart is no help for us for bias. But when the market starts to really move like this, gap away, red candle, that usually means after that there could be more downside, and it was like here, red candle, large gap, red candle, additional downside. Here, gap away, red candles, additional downside. It works only on the upside as well, of course. Like this green candle, gap away, green candle, next candle also green, because part of the least resistance is there. Now green candle, gap away value, gap away candle, additional move to the upside on inertia, call it what you want, but that is the part of the less resistance, and usually it is like this. Here it wasn't. Here it was a gap, green candle, and then just range and drop. I'm telling you this because of the bias. How can you also use this larger time frames chart for your bias and cash chart only? So bias, I said neutral inside the range. Whenever you see neutral bias, that means we are ready to take action on both long and short opportunities on good zones, of course. And that sellers can react on the first test of this yesterday high zone. Going higher above it would mean that buyers are accepting price above this spike. This spike, this is the candle of the ECB. If market go below pre-market support, of course, for us to expect a test of the main support zone, because pre-market support, pre-market resistance, those kind of zones are aggressive zones of support or resistance, and as such they are going to be used as a gauge of the market strength or as a place to go into trade on a pullback, not so much to fade those zones, because those zones are aggressive like minor zones. Now I have already placed these markers, and the first opportunity was not a zone based opportunity. First opportunity is when you look at this market, and they are making an up move starting from 530 and then going up into the open. Now they are opening, they are continuing this up move, but that up move unfortunately died here like 10 points below yesterday high zone. It would be an ideal short that we could get, move like this into the zone and then drop from here at least to fill the gap, because as you can see, market opened here just 6 points above previous cash close and didn't fill the gap, just go higher. So that would be an ideal situation for us. Go higher into the yesterday high zone, from them short 20 point stop into the previous cash close. But we didn't get that. We get this, and you could draw yourself You could observe this situation, then draw yourself a line and trade a breakout of this trend line when you see that the market is going to go below previous cash close. Now, this is a price action based trade, has nothing to do with the zones and carry more risk than this other kind of trades. So this is an alternative way how to participate in this move with your stop above this and close near the main support zone. Now this here long at the main support is of course trade of the day. As said in the morning notes, this zone, although was tested yesterday in pre-market and several times on Tuesday, can still hold and produce a bounce because market is in the upside move, as we can see here, this, and they can they can hold these main supports, this good large time frame support zone for several tests. But to be careful, as said there, because of this test, to be careful to observe this kind of bounces. And red flag would for us be that after this move we get a good bounce into the pre-market support, then I come back, made a half of that, let's say, and then just do this and ping to the downside. But that didn't happen. We had a classic thing that markets are doing in both of these opportunities, here and here. Test of the zone, going higher a bit, and another test. And now when they are moving higher, now is your time when they are here hitting this pre-market support that can act as a resistance. Now is the time to protect yourself, to pull the stop closer, nothing else. Because if you are going to go long on main support and put your stop to break even as soon as you get like 15 points of profit, it could just test your entry again and then go higher. So this test and retest going, it is a normal thing to see. And now from here, first target, which really doesn't pay much, is to close something near the pre-market support, but better to use this previous cash close, although it was already filled here, as a first target. And second target is, if you can, to hold into the yesterday high zone. And if you did close somewhere before this area all of your trade, don't hit yourself because of that. It is normal for day traders. I did it also. It is normal for day traders to cut a trade sometimes too early, and because of that you should close partially or learn to move manually. In my opinion, trailing stop is not good for this. To manually move your stop higher. Once you observe that market is going above pre-market low and above this pre-market support zone, put your stop here. When they go above this, just push a bit your stop, and having your resting closing order in the book in advance, as well as if you want to catch this short from here. Now this time this short really didn't produce nothing much, but it could be different in conditions of higher volatility. When you have a parabolic move to the good zone, you could get a very good reaction. You could get half of this as a reaction. But today it wasn't the case, and you could also get this test of the zone, retest, and then harder move to the downside. And after this retest and going lower, this is your time to protect yourself, and in this case this would be a break-even trade. Not allowing this to be a user, because in this period of time it was already 12:30, and you should ask that famous question yourself: is this could be a low of the day? Because if this could be a low of the day, then move from here to here is not a full 8-year move. It could go higher, and it did, but again we didn't get a test of this resistance zone near 12k that would produce us something. They died here at 972 for some reason. So that was the opportunity for today and thinking behind it. And tomorrow, new morning notes and new chart with zones. I wish you well, I wish you good trading and good night.